4 things to consider when thinking about selling your business or seeking capital. Sometimes these are ideas that are generated by outside parties. They inquire as to, hey, would you be willing to sell your business? Hey, we'd like to invest in your company. We'd like to loan you capital. And that gets the gears turning. Other times it's internally thought of from you and your team with your own strategic timelines, horizons, and objectives. But in either case, important things to consider. First of these being your sub-niche or your edge. And this harkens back to an older video of ours where we really delved into what makes you special, what makes your product, service, or offering better than anybody else's that allows you to compete on quality, not on price, and what is the key differentiator within that, right? What makes you the Coca-Cola, not the RC Cola? The second item is process and automation. And this doesn't reference or necessitate some high-level artificial intelligence, but rather, what are the standard operating procedures, the protocols, the processes and operations in place that allow the business to continue to function even if the key woman or man is not involved anymore. And so in the exit of a business, that allows for the transition to new ownership. And in the capital provision towards a business, it allows for the mitigation of risk from any key person thoughts or concepts in that regard. Third item is, what is the plan? Right? So when somebody acquires a business, they have to think from their perspective, how does this transition from the existing ownership to the new ownership? What are the pains? What are the risks that are involved in that? And so to the extent that those items are preemptively thought of and mitigated, it's incredibly helpful. So thinking of, okay, if we were to transition ownership of the company, this person would do this process would do this vendor would do this, and that's why it would be a painless transition. From a capital perspective, you can think of it from sources and uses, right? So you're going out and seeking capital. Those are the sources. But in order to optimally illustrate that narrative, that discussion, right? How is it being used? Okay, capital is going to be deployed in these tranches on this timeline to accomplish these hurdles and objectives such that it can be tracked, that things are being deployed and put to use effectively, efficiently, and according to plan. And the last item is, what is the upside? And this may seem a bit counterintuitive because you'd say, well, if there's fruit left on the tree, wouldn't the question arise of why haven't you already done this? But in reality, businesses have different seasons, they have different chapters, and even if you can highlight or illustrate all of the means by which a business can grow or optimize its profitability, it doesn't mean that in one lifetime or one iteration of ownership, all of these things can be accomplished. And therefore, the characterization and the narrative in regards to this topic is important, right? If you say, hey, look, there's 5 items or 5 objectives, 5 means by which this business could really grow and optimize profitability. We've highlighted all 5 of them, we've illustrated all 5 of them, but 3 of them we've been able to accomplish within our ownership with the time and resources that we've had available, and 2 of them remain available for the next iteration of ownership, for the next tranche or cachet of capital to come into the situation. And what that does is it provides confidence that this person really does, and this company does have their arms around all of the potential upside opportunities, yet not all of the wheat has been harvested, juice has been squeezed, whatever analogy you can think of in that regard. And therefore, it creates the perception, an accurate one at that many of the strategic objectives that have been focused on have been effectuated and put into place successfully, yet there's still remaining upside for the next steward of the business, whether that be from a capital deployment perspective or from an acquirer's perspective. And therefore, 4 things to think about and keep in mind as you're contemplating potentially exiting or seeking capital for your business. 1, niche or your sub-niche, and your edge. What area it is that you specialize in, what pain do you solve for, and why is it differentiated such that no one can compete with you? Secondly, process and automation. What processes, protocols, and operating procedures are in place such that it is not a one-woman or one-man show, and such that there is an enterprise that is monetizable, sellable, and transitionable to new ownership, or that can operate under new capital, even if the key person is no longer involved at some point in the future. Third, what is the plan? If you find the capital, how does it get deployed intelligently? If you are going to sell the business, how does that transition take place in a painless and fluid way? And fourth, what is the upside? Fruit is remaining on the tree. What can the next owner or capital provider take this business to? What are the next levels that are attainable? And knowing what those are shows a certain subject matter expertise in the business, and there being some remaining for the future is equally as important. And these are just a handful of elements to consider. Actually, a handful of elements that comprise, not all of the elements, but a few that comprise one of the main pillars of the Hillview Partners proprietary exit and capital process, So very important things to keep in mind and to think about as the concept and as the thoughts around business exits and seeking capital evolve within your company, your team, and your own strategic objectives for your business. Appreciate you sharing this time with us. Keep pushing forward. God bless. We'll see you next week.